Okay, good morning, good evening, good afternoon. Welcome back to Canon for the channel for Arsenal fans all over this world. Welcome back to another series of a series of what? Just talking about investment opportunities and other bits and pieces in this world of ours. And I've got my good friend Gabriel back. Yeah, on the other side of the world, Australia. Gabriel, how are you, man?
Yeah, really good, really good. Yeah, it's very cold today. So now I can honestly say we're in Australia here in Melbourne. It's about 12 degrees Celsius. Damn cold,
Right.
but sunny.
Well, I tell you what, Gabriel, the weather's been not too bad today. Actually, yesterday it was rainy. Day before that it was quite hot. So kind of role reversal. We're kind of getting up into summer, whereas you guys are going into your winter. So
And
yeah,
it's a winter. Yeah,
yeah,
yeah, yeah, yeah, yeah.
yeah.
There you go.
All right.
So
So yeah, Gabriel's
all
going to be
good.
talking to us, about some opportunities that you two can actually get involved in. Have you been thinking about maybe investing? Now is the time to do it. Gabriel, take it away, man.
Take it away. Hi there, everyone. Um, yeah, so I'm from from London, but I now live in Australia, down here in Melbourne, Australia. Um, yeah, listen, over the years, just had to look at obviously a few ways of looking at it. Obviously made um, money in my time, but usually when I just looked at what the banks were doing, I just said to myself, can't be. I can't be doing this, leaving my money there in my bank. I've got to do something with it. So I had to think about creating financial intelligence by learning a lot of things by you know obviously there's a lot of material around now. We have the internet, and also talk getting in, or subscribing to people who actually know what they're doing. So learned a lot over the years. Obviously we do, when you do learn, you make mistakes, but you at the end of the day you come out better in the end. um, Now, it's got the slides there, Alex. So
Yeah.
basically, yeah, I'll make that. So basically, um, what we're looking here is that I just wanted to make sure that you understand this disclaimer just says that this is only for information only. I don't, I'm not giving any financial advice. This is just basically information and for educational purposes only. The information provided here is based on factual information as well, right? So, um, I would take it away.
Yep.
Right. So, first thing is I want to understand. I don't know if anybody understands well, I'm sure people will understand the art of investing itself. But what we have to understand is that the main thing, no matter what you do, is that you've got to make money work for you. You can't, if you're going to make money, we all know that we all earn a living. We work. We work to earn a living. That's to pay the bills, to pay whatever, debts, etc., all those sorts of things. But in order for you to create your financial wealth in itself and build it up over time, you have to allow money to work for you. There's no question about it. Um, some people start obviously understand it when they're very young. Some people start later in life. But in the end of the day, you know, it's about investing and making sure that your money is actually working for you rather than you spending all your whatever time. Some people spend 12 hours, whatever. You've only got a certain amount of hours in a day, um, and you can only you work that as much as those hours in order to earn some money. Whereas you can allow that money to work for you over time, and it can then, let's face it, become scalable. And can you put on the second slide, please? Or third, sorry, third slide. The second slide, sorry.
So, so, well, this is it, isn't it?
No, sorry, it's the third slide. Is it? That's the first one, isn't it? Oh, I'm still seeing. Oh,
Yeah.
I'm still seeing the first one with the disclaimer.
Oh, right. Why is that?
Yeah.
Because I'm changing it. Right, spare me a second.
There you go. That's it. That worked. That worked. Yep, that worked. All right. So now, if anyone's ever heard about the cash flow quadrant, right? So what cash flow quadrant? This is something that was taken out of a guy named Robert Kiyosaki, who wrote the Rich Dad Poor Dad. And if anyone's read that book, and it's a great book. I think it just puts things in simple terms as to um, the art of investing, um, building up assets, etc. So what this basically shows you is there's a four ways to produce income, right? So if you look at the top left there, you can be, you as an employee, right? You have a job, and what it means to have a job, and in order for you to earn money, obviously, is that you get paid based on the hours and the effort you're working with, right? So then when we look at that, you know, there's no leverage, and funny enough, when you look at this is where 5% of the people, the 5% of the wealth goes, because we as people as employees work for the wealthy. The wealthy are the 5% wealthy, right? Now, on the other side, on the bottom left there, you've got the self-employed. Now you own a job, so you work for yourself, um, but again, there's no leverage, right? And again, you look at this, you're still, time is the essence, and when we say no leverage, we're talking about time. Your time is still required for you to earn your money. All right. So, yes, you might be paid a lot more money being self-employed, but it's still your time. Now, when you start looking on the right-hand side, right, the top right, there's business owners, right? So these guys who own business, you know. So what we're saying here is you own a system, right? You can leverage, right? And this is where 95% of the wealth is owned in businesses as well, when own a business. But ideally, what we want to be is when you look at the bottom right as an investor. So what we're trying to say is you don't actually have to be a business owner, get into a business and run your own business and then let that system run for you. You can walk away, go on holidays, and then the business runs for you because you have all the managers and etc. working for you. But that's, obviously there's a lot of people business owners make a lot of money that way, and millionaires or billionaires. But you can also be an investor. So you as an employee can work yourself quite easily if you become someone who can be smart, get into investing, and you start owning your own investments. And that could be stocks, shares, whatever, whatever the investment vehicle is. Right, let's move on to the next one. Yeah. So now this one shows you, I'm just going to look at this one because it's a bit small on the screen. But if you look on this side here, we've got the why the rich, this is basically how the rich get richer and the poorer get poorer. Because if you look on the left-hand side, right, your income comes in as a salary, and then you've got all the expenses. That literally looks it that way. So all the expenses come out. So you get your income, expenses, and if expenses are higher than your income, obviously you become poorer and poorer over time. You also look at most of the people in the terms of the middle class, the poor don't have any assets, so therefore their liabilities are again just their mortgages, car loans, etc., credit cards, all that sort of stuff. Now, when you look on the right-hand side, where the rich are, what do? They get income, which is what I was talking about earlier in terms of investments or businesses, right? What they do there is that they build incomes. They've got the just trying to read that, Alex. Sorry. So they've got interest, royalties, and and their expenses are basically taxes and mortgage payments. Very small compared to the expenses on the left-hand side there. And then you look at their assets, all the assets there, which could be, real estate, stocks, shares, bonds, etc. And, and their liabilities, right? Yeah, as we put there, is their mortgage, customer, sorry, I'll just try and read that, man. Credit, credit cards. Yeah, loans. Yeah, consolidated loans and credit cards as well. But they use those credit cards obviously to make more money. Take out a credit card. Say $100,000 on credit in order for them to make more money because they're buying assets, etc. And in order for them to make money. So that's what the rich do, and they just get richer and richer because it becomes scalable. They don't need their time in order for that to grow and grow and grow and grow all the time. It will grow based on smart investing, and the money's working for them. So when we go into the next slide, please. So the whole idea again, when we talk about this, is that this is where you want to be. You can earn more on your money a week than banks give you in a year, and you want to earn while you sleep, right? That's all. You want to earn while you sleep. You want to earn while you're going off on holiday, or whatever whatever you're doing. You're busy with busy doing what you're doing with the family. That's what you want to do. You want the thing in the background working for you. That's what you want, rather than you always thinking about working for money, right? Okay, move on. Next slide, Alex. Right. So now we're talking about whatever the investment vehicle would be. Now I'm going to talk to you about the forex exchange, which is is the biggest market in the world because of the amount of volume that is traded in a day, which is obviously around about 5.5 trillion US dollars a day, and that's a massive amount of money. Now, when you think about that large volume of money that's on the table, trying to tap into that when you've got these guys, and even the banks do this, the banks, the financial institutions, they all make money off this. So whatever money you put in the bank, part of it is in stocks and shares. A lot of it is in also in forex exchange, where they've got their traders making a lot of money out of it based on your money. So whatever you got, $1,000 or $2,000 in the bank, or pounds, or should say, whatever the case may be, they will leverage it up and say, I'm going to write it up to be $10,000, and I'm going to put that in and trade it and trade it. That's what they do. All right. Next one, please. All right. So this just shows you what the forex exchange is. So there's an example there, which is the euro AUD. That's one, and there's another one which is it depends on euro AUD or the GBP. What's the next one, Alex? The euro GBP. You've got the USD, Japanese yen. These are all the counter currencies, and how they trade it. So the AUD being the counter currency to the GBP, right? So what happens is that you can see on the when you look at the red, or depends on where it's orange, but it's red. Red means that it's going down. Now, when you look at the top of that, where it's just before it starts going down, right? On the left there, they can still make money based on the fact that they say, okay, I'm going to take a position out near the top, where just before it starts going down, and then take a position. And then say I'm going to take the profits out and close the trade out just before it starts going to the end, where the red ends, just before it goes green. So I could take a trade on them, and when you're trading with a certain ratio of let's say $1,000 or something like that, and there's $1,000 per pip or points, you can imagine how much money they're making based on just that movement alone. And the same goes when they can go up as well. They can do the same. I said, I'm going to take a position out there at the bottom there, which starts down green. You can see the next one when it goes red, and then I said, and then it starts to go up, right? And that in itself, again, they can make money. So just remember this: not like the shares, stocks and shares, where you take a share. You said, I'm going to buy something at $1 a share, and I'm expecting the shares to go up to saying $10 so that I can make some money. In this case, it's different because they can make money when it's going down, and they can make money when it's going up. And this is how the traders make serious amount of money. And so imagine this. Now, to do this stuff is obviously very, because there's a lot of technical analysis, there's fundamental analysis, what's going on in the world. Then they look at the technical analysis as well. And technical analysis is when you start getting technical with all the how the things compress, how the when it's going to hit the support levels, or the support levels, or I'm trying to remember the other levels as well, or when it's going to hit the ceiling, etc. All those sorts of things. So they've got all those kind of analysis. They work it out. And it takes a lot. And then they've got about 5 different screens, per person, looking at all these screens. And it takes a lot of time. And these guys have been doing it for years, and they love and breathe it. So, to be honest with you, to be doing it, I've done it before, but and I know what it takes to do it, and I had to be very diligent about it when I've made quite a bit of money. But as soon as I lapse and I take my eyes off it and get distracted with other things, it's when I start losing money. So, yeah. Next thing. Next slide. Yeah, please. Now, as I said here, you can make a choice. Make this choice here. You can spend extensive hours a weekday trading. You have to automate the signals and to minimize your losses. You have to trade without emotion. You have to love forex trading with a passion. And most traders who are successful in trading have many years of experience. Absolutely right. So all those things, and there's many other factors in it. So some people just go, you know what? They look at it and they just go, oh my goodness, that's just too much. I don't want to. I can't do all that stuff. Well, guess what? In the next slide, please. Yeah, all this. You have this choice. You can earn like a professional trader, get paid daily from home. You don't have to do the forex trading yourself. And this system runs on autopilot for 5 days a week, right? So that's where we're now, as I alluded to earlier, about becoming an investor. Right. Okay. Next slide, please. All right. So what this system, now you look at the banks, right? Comparison example. I'm just giving you this is facts, and this is a comparison example. Now, banks, if you're looking at a term deposit, a good term deposit, and a bank's giving you 1.5% a year. If you get that, you're very lucky. But I'll put it there anyway. And when you think about that, that's 0.16% per month. Oh, I mean, well, all I can say is, yeah, that's what the banks are giving you. And I'll tell you something. As I said, 1.5% a year is, something that is. I'm being pretty generous there because they don't give you that. I've seen many of they're giving you around about 0.95% per year. Right. So people just turn around and go, I don't want to, and a lot of some people say, I don't want to leave my money in the bank. So you know what I want to do, and many people do because they know about stocks and shares. So they look at the S&P. So do stocks and shares and everything. So S&P 500 means all the the high the 500 most lucrative stocks around there, and you can see on average what they giving you in a year. So 21.8% on 2017. It went down in 2018, and in 2019 it went to 31.5%, and then, which is pretty good return, right? I won't complain about that for a year. And then in 2020 it's 15.76%. So that's obviously a go-to, because they realize that, I'm putting my money in shares in a conservative way. When you've got that investment vehicle, may be a managed fund or something like that, you might be getting something like, in those type of figures.
Mm.
But now, when you look at this automated platform I was just alluding to earlier, right? Look at what you've been getting, and I'm telling you, this is for this year. I can even go back into last year if I wanted to, because the returns were pretty much on par. In fact, even in a few months, it actually was around about 35 to 40% in some cases.
Wow.
Now, and that was before COVID, right? So now they've managed the risk and say, let's be a bit more conservative now because of the way the markets, are going. But on average now, I've seen it, since COVID, they've been giving you around about these sort of figures. So this year we got 21.78% in January, 20.3% in Feb, and in March we got 23.99%, and in April 23.84%. And I think when I looked at the one in May, which just it was around 21. I think it was about 22% or something like that, 21, 20, 22%.
Mm.
So think about that in a month. That's what you get in a month. So I mean, I'm sure people will be happy with that. Yeah. So this is where you're looking at money working for you. And if you want to know how this, learn a bit more about this information and how you can get involved, you can contact Alex, and he will he will definitely give you some more information on how that can be done. That can be done.
Yeah.
So there you go.
Thank you. Just have been some comments in the live chat. Again, the questions. Probably it's not the ideal platform, but if you want to know more information, like Gabriel said, send me an email, and then just quickly put the email up. There it is, arsenalrepublic1@gmail.com. Again, I don't think there's any questions, but let's just see what people have said. We've got Ron Miles, who's a regular subscriber, says hello.
Hello.
Dean, whoops, sorry, just try and keep it on task. Balthasar Rodiega says, how ironic. I was just going to say, Forex and boom, Forex. One of our moderators, actually, Ashley D, says, I traded for 5 years. And how did you get on with that? Actually, how did you get on with trading? I think what we're talking about here is something completely different in regards to trading. There's an automated system on the opportunity, but I can't go into the bit of detail.
No, that's fine. That's fine. That person was whatever to say that. Oh, I traded for 5 years. I traded for, goodness me, on and off since 2012. So on and off, done it quite a bit. So yeah, I just know what it takes. And I'll tell you one thing: I lost most of my money when I was sleeping. Because I'm here in Australia, I'm watching the markets with the big volume. The big volumes is like Euro, USD. That's one of the biggest ones there. And guess what? Most of the volumes happen around about around about 2-3 o'clock in the afternoon, right? That's when it happened. Guess what? I'm sleeping.
Yeah.
So
and
it's
question for you guys. Auntie, again, another subscriber said, do you trade cryptos?
I invest in cryptos. I don't do the trading on that, but I have been involved in platforms that especially with the automated ones, we have done cryptos, and again made small amounts on it. But then I decided, no, I'm going to do that. because I was there in cryptos from a very young, sorry, very and very much in the beginning, around about 2016. That's when I started, which I was there in 2013 though, but 2016 I started, and that's literally held. I just held my coins. That's how I did it, and that's how I've made money from that perspective. Yep.
Wow, wow. Okay, GK says, "Good evening, Alex, and good evening to you as well, GK." And then actually says, "I took $100 and turned it into 10,000. Was it 100,000? I need to get my glasses on. Is it 10,000? 10,000.
Yep.
I was one
Yep.
of El Toro's top traders with a success rate of 96 success rate. Wow.
And listen, Ashley, kudos to you. Great
Mm.
stuff. You know what I mean? And if you loved it to do this with a passion, as I said, if you love to do it with a passion, yeah, that you know, it's all for you, and you need that passion to do it, you know, to make money like that. You have to make, but you know, you're very few of many who want to who want to do this. A lot more people just go, nah, it's too hard, blah blah blah. And not even that, a lot of people will do make money. There's more, sorry, more people who lose money than actually make money in this game. That is the way it plays out.
Yeah.
Yep.
Yeah. GK says, question, what's this calculating Kroenke's Republic of Ireland from Arsenal? I'm not sure I'm understanding the question.
What's this calculating? Correct.
Let me think about that one, GK. Static
It's
says,
quite
"Hey,
random.
Alex."
It's quite random.
Was that Gabs?
Quite random, wasn't it?
Yeah, I'm not sure.
Yeah.
I'm understanding that
Yeah,
question.
yeah,
What
yeah, yeah, yeah.
calculating Kroenke's Republic Island? Well, anyway.
Mm.
What's this? No return on investment. Oh, right.
All right.
Okay. Yeah.
Yeah, yeah,
I
yeah,
understand what you're saying. Yeah, with the owners of Arsenal. Yeah.
yeah. He's
Gabs, I
talking
want
about
to ask
down
you a
the
quick
right.
question, Gabs. Because we went to school together. Uh, oh, how I wish that they had taught us this at school, Gable, about investing from a very young age,
That's
about the
correct.
intelligence of investing money.
Yeah, they don't teach
Multiple
us it.
sources of
No,
yeah.
no. The thing about school is that they teach us how to get ready for a job, right? That's what it is. That's what they do that's what they do at school. You know, whatever vocation in life you want to do in terms of job, when you want to be a accountant or a lawyer, or or just want to be someone who works in IT, all those sorts of things, or maybe even get you ready to get into up to maybe start your own business or something like that. If you say to someone they're going to start your own business, they'll teach you certain things about economics and things like that, but they won't teach you how to run a business. You won't be able to do that. You have to do that based on experience. But having said that, they don't teach you about how you can be financially more astute in terms of you know knowing how money works for you. And teachers can't tell you that because, hey, well, look at do you know any teachers that are earning some serious amount, in your schools, and earning a serious amount of money? They won't be there.
Mm,
There you go.
yeah. Antti goes on to say, what cryptos are you investing in now and why? Are there any long-term risks you see when investing in cryptos?
All I can say is very good question. There is that when it comes to investing, and as I said, I'm not giving in any investment advice here, right? But I can tell you this, right? When you're investing in cryptos, right, right, um, nothing's guaranteed in anything financially, right. But you need to look historically what is going on. So you just have to look what is going on. You have to see the patterns of what's going on over time with cryptos. When is the time when things are going to go appear? Literally, when I say when you are going to the market that goes through a dip, and when it's going to rise. And you look at that, and if you looked at crypto, right, you will see there's a pattern, right? You have to follow the pattern, right? And anything. So yes, it dips like crazy, right? And you could risk losing a lot of money, of course. But
Mm,
if you're smart enough, you will know when to get in at the right time
mm,
and when to take some of the winnings or the money you've made and take it and then say, all right, let's wait for the next dip. As I say, buy low, yeah, sell high.
mm. Okay. Ashley says, let's remind everyone. Hey viewers, this is not a football or Arsenal vlog. Yes, that's right. It's not. My school taught me nothing, and likewise,
There you
giving
go. Absolutely does. Yeah, likewise. Yeah, totally. I
nothing, nothing.
good. I think that's with most people. You know, most people, they teach you nothing.
Yeah,
It's
yeah,
about a job. Absolutely right. Yeah.
yeah. It goes on to say, best thing about spread betting in the UK is tax free. You can make a million quid and not pay tax on it. So is this a economics live show or something? Kind of. We're just trying to educate you and try and show you there's an opportunity if you are interested. Again, send me an email, arsenalrepublic1@gmail.com if you want to know more information. Again, we're trying to limit the kind of topics that we're covering on this particular
Yeah. It's not. It's
vlog.
not any. It's not an economics lesson. Definitely
Yeah,
not.
yeah, yeah.
No.
I would not invest in crypto. One, it's not regulated, and two, it's way too volatile.
That's what I'd say most people say. Yeah. When
Yeah,
you Yeah, that's what most people say.
yeah.
But then again, who's making? Yep, that's fine. It's up to them.
The
But most
bank,
people who are making, yep,
the
the
banks are the
banks are the
biggest
biggest scam.
scammers. They control the market and
Yep,
virtually everything.
that's correct. That's correct. That is absolutely correct.
On average, how much do you earn? How much do you
When
get?
you
How much do
gear,
you earn on your
oh man,
trades? Well, I
yeah,
don't think.
I don't think yeah, that will get into a bit more of a detailed discussion
Yeah,
here. I
yeah,
think that's
yeah, yeah. We have come to an end on this one. Again, guys, if you are interested and you want to know more information, by all means, send me an email, arsenalrepublic1@gmail.com, and I'll try and give you some more in-depth details. Again, it's not quite the right platform, but listen, I'm here almost every single day, but Gabe was here every other Saturday to give it a little insight into the opportunity. If you wanted to know more information, again, send us an email, arsenalrepublic1@gmail.com. Gabriel, as always, man, it's a
yeah,
pleasure to
no
have you
worries.
back on the channel, man. A
Yep,
little bit more lively in the live chat, and I see the numbers just like, yeah,
yeah,
trebled in
got
number.
yeah, yeah, some good questions. Yeah, thank you, Gab. Very insightful. That's all right. Thank you, Anthony.
Yeah,
Respect to that. I mean, I'm just hoping I'm just here to give some information from what what I've gone through the years and just trying to share it. That's all it is. It's just my story. That's it.
yeah, brilliant,
Yep.
brilliant. So there you have it, guys. Again, one more time, if you're interested and you want to know more information about the opportunity in inverted commas, send me an email, and yeah, we can probably talk to you apart from doing the live show. Yeah, there is an opportunity if you want to get involved, but if you want to know what we're talking about, send me an email, arsenalrepublic1@gmail.com. All right, Gable. Yeah, it's wonderful, man.
Thanks.
Wonderful. It's been a busy morning and busy afternoon over here, UK
Yeah.
time, and no doubt it's like quarter past
Yeah.
12 in
Um,
Australia.
uh, yeah, and I'm just thinking, it'll be nice. It's good to hear that you're getting some form of freedom back there in the UK. Yeah, especially
Yeah,
now it's getting coming up to summer. So yeah, definitely.
yeah,
I'm sure you got guys starting to feel a bit better. It's good. Yeah.
nice one. All right, guys. So that is it. I will be back later on this evening to give you some more news in regards to Arsenal. Not so much about the opportunity, but yeah. So what's this? What's this one more from Anthony? When need to get Gabs to analyze the depths of
Yeah. Yeah, give me the charts. Yeah.
yeah. Nice one, Anthony. Nice one. I like that one. Anyway, guys, so like I said, I'll be back later on this evening to give you some more live news. The one probably we spoke about early on this morning. Just kind of reviewing the news from there. But from somewhere sunny in North London and late after midnight in Australia, we're going to bid you farewell, guys. Again, thank you very much, Gable. As usual, we'll be in touch throughout the whole week, like we have been. Yeah.
Yeah,
And
indeed,
that is it. That
indeed,
is it.
indeed.
All right, guys. So
Thanks,
thank you
guys.
very much. Yep, and we shall see
Thank.
you the following Saturday for another segment of the opportunity. The opportunity. All right, guys. Make sure you subscribe and hit the bell notification button so you can receive all the latest news right here on this wonderful channel. Until then, I shall bid you farewell.